All right on time. Good morning, everyone. We are going to talk about spotting scams today because there's a lot out there. So we have Seago Capital, that's me, and uDirect IRA, Kaaren Hall. And we're doing this because we work with investors all day long. That's what our companies do. And we hear from our investors what's going on in the world. And we heard a crazy uptick of people telling us their stories of being involved in scams. And so for me, that caused me to kind of dig in, like, how big is this problem? And I saw how big the problem is. So I thought we definitely need to put on an event and talk about this, talk about what we've seen and how you can avoid it. And Kaaren, in the space of, in the retirement plan space, this is a big target for a lot of scams. So that's why I have Kaaren here with me today. She's seen a lot, she knows a lot. So we're going to talk to you about some steps that you can take that are pretty easy to make sure that your fund stays safe. So Kaaren, why don't you go ahead and introduce yourself first before we dig into the material?
Sure, thanks, Sarah. I think that this topic is just crucially important. It's easy to self-direct. It's not that hard. You open an account, you fund it, and then you invest. But really the crux of self-direction to be successful is the due diligence. So we'll talk more about that. So as Sarah said, my name is Kaaren. I'm Kaaren Hall. I'm the founder and CEO of uDirect IRA Services. And we've helped thousands of people in every state in America we've helped them to self-direct their retirement, move it from market correlated assets, stocks, bonds, and mutual funds into the alternative asset space. And we do see fraud. And so we're going to be talking about that today and some of the ways that we have learned about how to deal with that.
Yeah, I love it. And for those of you who were invited here by Kaaren, you know what a self-directed IRA is. But for those of you who are invited here by Seago Capital, Kaaren explained a little. But if you don't know what a self-directed IRA is, or a solo 401k, it's basically their retirement plans that you can decide what you invest in with them. And so if you have your money either sitting in cash, which a lot of you do, if you go take a look, a lot of people have those funds just sitting in cash, or if they're not invested well, like if they're getting negative percents, which a lot of you are, or single digit returns, that's when you might want to consider, hey, let me take this under my own control, be in control of my money, and decide where I want to place those funds. And so it's extremely lucrative for you to do that. And that's what Karen's company does. And we refer, anytime our investors want to do this, we refer them over to uDirect because they're an excellent company to work with. And our investors love taking funds that are not working in their current in their traditional IRAs and moving into something that will earn double digits. Okay, cool. I was trying to read and talk at the same time. Feel free to use the chat, you guys. The chat, I have it up. I'm watching it. So as we go through, it would be great to be interactive. And I want to say, like, we all learn from each other. So if nobody says anything, nobody learns anything. And so from people being open and transparent and letting me know what kind of scams they had been involved with, I was able to put this together and realize, hey, this is actually a big problem we need to educate on. And sometimes it might feel embarrassing, like, oh, I don't want to admit I fell for a scam, but they're really good scam artists out there. And so feel free to use the chat and give people examples, because you'll be surprised. There's a lot of examples.
This is some of what we were talking about when we were driving over to the event on Friday is some of the examples that we both run across. So we'll definitely be sharing those with you today.
Yeah, we will dive in. Okay, so let me go over the agenda, the overview. What are we going to do today? So we're going to talk about spotting scams, not just Ponzi schemes, but also fraudulent investments. So we're going to talk about scams by the numbers because it's way more prevalent than you think. We've all heard of, Bernie Madoff, and that kind of sticks in everyone's mind as one big one. But there's a lot more out there, and it's a lot more common than you think. So we're going to show some numbers around that that my research uncovered. We're going to talk about some of the examples we've seen in our own clients. And obviously, we're not going to use any names. So if you told me about your experiences, I'm not talking about names, but I'm going to give you examples. And Karen's going to give examples of what she's seen so that you can avoid being victims yourself. We have a due diligence checklist. Two of them two items are really particular to scams, which we're going to talk about today. And then we have a 4-page checklist, which we're going to share with you guys afterwards. Feel free to print it, use it. It's an actual checklist. Feel free to share it so that fewer people get involved in these scams in the future. And then kind of talking about your custodian. You know, if you're looking to invest with your retirement funds, what is the role of your custodian? What should they be doing and not doing? And they're not your investment advisor, but perhaps there's some things they can do to help in this case. Anything else you wanted to add, Kaaren?
I think that we've covered it. I think let's just jump in and we'll flesh it out. What do you think?
Cool. Perfect. Okay, Sugo Capital. So who are we? We connect investors to passive income opportunities, and we do a ton of education. So I'm Sarah Sullivan, the CEO and founder. We've acquired over the last 4 years 29 apartment complexes throughout the United States. Texas and Sunbelt are our locations. We have over 800 million assets that we've acquired over those 4 years, and it's all through investors. And so it's near and dear to my heart that investors learn how to do great due diligence so they make great investment choices for themselves. Because, you know, we don't tell you what to invest in, your custodian doesn't tell you what to invest in, but we can share ways that you can make those decisions for yourself and keep yourself safe. And then I'm also the advisory board of 2 investment firms. And then let me just take a second, Kaaren, for you to do a little bit more thorough introduction of yourself. I'm just going to hide that. And why don't you do that?
Right. So I did found uDirect IRA Services. I didn't find it. I created it. I'm the founder. So my background, besides being a radio announcer, where I did some of that when I was my first job, then I got into real estate. I got into property management. I was a realtor. I've had a real estate license in Washington State, Texas, and also California. And property management was something, managing buildings, large apartment buildings in the Seattle area. Started out with a small one and did it well. So I kept getting assigned bigger and bigger buildings and having to go through things like the eviction process, so taking someone to court or meeting them there and going through it. And learning so much in the process. And then getting into mortgage loan origination. So loan servicing is a huge field, and it has really, really helped me understand the self-directed IRA field. All these things have, because our account holders are investing in real estate related assets, but it's so important to know the intricacies of these assets, what the documentation is called, what the expectations are as far as timelines and things like that. So after loan servicing, I got into loan origination, really dealing with people more one-on-one, and residential loan origination where there's so much urgency. And so I have translated that sense of urgency into uDirect IRA Services and the way that we service our account holders. But so that's my background. It's a broad real estate background in different areas. And I'm presently a real estate investor. I needed to do that. I couldn't really hold my head up if I didn't actually invest in real estate. But most of my time, like 99% of it, is spent right here as CEO of uDirect.
Love it. And it's a great company. As you can see, your clients are giving you accolades in the chat. So that's always really awesome. All right. So going back to the material, you know, I mentioned why are we doing this? Well, it's because of what we heard from our clients. So I typically do about 700 investor one-on-one calls per year. And at least twice a week, people were telling me these elaborate scams that they were part of, and they were big scams. And so that was about 6 months ago when I started researching how are these taking place. Some examples I'll give, carbon capture. So I won't say any particular names in this because a lot of them are still in court, like they're not finalized, you know, that they were intentionally doing something fraudulent, but they definitely ended up being fraudulent. So that's actually kind of a good point to make, is that a lot of people who were running frauds and scams, most of them didn't start out with the intention to be fraudulent or to scam their investors. What happened was they started out and things started going bad. And in order to cover up the negative returns that they were getting, they would raise more capital in order to get distributions out to investors, while they were going to make it right in the next coming months, quarters, or years. So they thought they were going to catch up, and then it would snowball into something that turned into a Ponzi scheme. That's the majority of what happened. It's not a majority that people set out like, oh, I'm going to build this big fraudulent thing. But both do happen. So there is one that I heard about a lot from my clients, and Kaaren, bump in and let me know if you heard of this, but there is this huge carbon capture fund, and people were like, Sarah, you should partner with them. You should jump in on this. You get a 500% bonus appreciation in year one. So you invest $100,000, you get $500,000 reduction on your AGI. And I was like, wow, that's pretty good.
Too good to be true, right?
Yeah. But so many people were saying it. I was like, okay, yeah, okay. And I just didn't ever have the time to do due diligence on it. So I never went out and looked at this personally, at this investment. But this was a pretty big one. So say in the chat if you guys were part of that one or you heard of that one. Again, I won't say the name, but if you were part of it, I mean, there were a lot of people. And so they put money in, and it ended up being a scam, a Ponzi scheme. And I don't believe that they set out for it to be a Ponzi scheme, but it snowballed into one. And so that's in the court. And then I'll give some examples of people who I talked to an investor last week, and they said, oh yeah, I was part of a scam. They ran off with 100% of investor funds. And I was like, really? Tell me more. And he said, well, it was my wife's best friend's husband, and we've known each other for 5 years, and he presented an investment and I invested $500,000 in it. And I was like, you didn't do any other due diligence? I can't believe it. And he said, actually, we did. We asked for monthly financial statements and we reviewed them and they looked good. So we went ahead and invested. So we're going to talk about how common that is and something you can do to avoid this pitfall. Someone else said, one of my employees, I have an investment coaching company, and one of my employees, who is like our top trainer on options trading, went off and started his own fund. And so I invested in that. He was my employee for 7 years. He was a great guy, ended up being a scam. And so it's like, wow, your friends, your employees, your friends, family members, people you think that you can trust and can be inviting you into scams. So to me, when I hear these kind of things, that's the even more startling. Someone out there on the internet who's creating this scam or this scheme, okay, that's one thing. But when it's people in your first degree circle, I think that's like more of the shocker that this is also common.
I can step in here and say that
please. Yeah.
I probably met a dozen people face to face, hanging out like we did at I Survived Real Estate, who are now in jail. And some of the people who are on this call or this event today, they know who I'm talking about. And you're right, it's friends and you trust them. And so really you have to realize that even if it's your mother, you do your due diligence, right?
Yeah. Do you want to dive into what, you don't have to say any names, but some of what they had built, those scams that they ended up in jail for, like what had they created?
Right.
Yeah.
Ella San Jose brought this up, so I'll go deep on this. And he says multiple lenders on one property, no recording of docs. That happened with somebody that Ellis and I both knew personally, and it was two people that were business partners. And what they were doing is they would say, "Hey, take your IRA and make 100% loan on this house." So you do your due diligence. You go to the trust company or the title company, and you would make sure that they actually owned the asset. Well, before I lend money, do they actually own it? And so people would do their due diligence, maybe get a preliminary title report. Yeah, they own it. Okay. These people have been around for 10 years. Everybody knows them. They're well trusted. And I know they own the property. Sure. Okay. Here's my 100% loan. But then they were going to other people and other people and other people. And what no one was checking out is they trusted them so much. They forgot that due diligence doesn't stop when you give them money. Due diligence is an ongoing thing. And so if you were doing your true due diligence, you would have researched to make sure that your position got recorded, to make sure that your 100% first lien position was actually recorded with the county. And in this case, it wasn't. And so several people made 100% liens on property, and those liens never got recorded. Ultimately, those people did meet justice. I wouldn't call it swift, but it was slow and painful. And there were some pretty upset people. And we really went deep. In fact, when I heard about this, I was around that time, I went to a conference and I was able to actually talk to the head of enforcement for FINRA. Wow, she was there. So we talked, she said, hey, this thing's going on. What can my account holders do? And she said, we'll talk to this office in California, and here's their form, and have them fill it out. And so we did that. And so then we had about 17 account holders, not a lot, but one is too many, but about 17 account holders involved. So I gave them this information. They filed, and ultimately it went to court, and these people were incarcerated. I mean, they did, but did anyone get their money back? They didn't. So it's difficult, Sarah, and I know that you're going to discuss this as well, to know if something is going to be fraudulent. Like you said, a Ponzi scheme, no one intends for it to be that. It's where they rob Peter to pay Paul. So, how do you do your due diligence? It's just tough because you don't know what's going to happen once you get in the deal.
Yeah, and that's a good point, that you continue doing your due diligence even when you're in the deal. I do want to make a comment. I see a lot of you commenting to hosts and panelists in the chat. And so we're seeing your stories. It would be great if you're open to, from the drop downs, select everyone, because everyone else who's on here, all the other attendees, we have a couple hundred people, they can see your story as well. Because I see a bunch of you said, yeah, you were in the carbon capture for 500,000, painful learning opportunity. Yeah, other people were saying, yeah, I was in long-term relationships where partners ran off with my money and investor money. I was impacted by a carbon capture deal through a different partner with 5x depreciation. So that was like a common thing. It sounds like there was more than one. Yeah, so please choose everyone from the drop down, because everyone needs to hear these stories so everyone can be more careful. Okay, awesome. I'm going to share my screen again and jump back into some of the numbers. All right.
And we can talk about note scams, Cindy. We can talk about that later.
Yeah. Okay, so and those are probably not even in the numbers that I'm going to show you guys, because the numbers that I'm about to show are from research. I want to ask in the chat. Okay, I'm going to go back to 2019. How many scams do you guys think there were, like fraudulent investments that the SEC discovered in 2019?
Now, this is pre-COVID too. So COVID brought even more, but I'm sure there were quite a few, right?
Yeah. All right.
JP comes in with a random number.
236. All right, so I'll show you. In 2019, there were 60 scams that the SEC discovered, but it represented $3 billion in investor funds lost. That's a huge number. That is huge. That's definitely, that those 60 scams represented a lot of individual people. In 2021, 45 scams, $5.3 billion in investor funds lost. Well, they went somewhere. They went to the scammer and then out to something else, right? But the investors no longer had them. They didn't get their money back. $5.3 billion. That's huge. In 2022, 57 scams. That's one scam every 6 days that the SEC discovered. It's crazy. And in 2023, there are 63 scams so far that the SEC has discovered, have gone on trial, and been deemed a scam or a Ponzi scheme. So there's probably more, like some of you put some bigger numbers in there for number of scams, and those are probably more accurate, but they might be on a smaller scale. I was scammed by a PR company. Like, oh, I didn't think about, doing deep due diligence on a vendor, but even on a vendor, now I've learned to do that. So there are so many out there.
I just mentioned here that where, the SEC finds these scams. And so a lot of times what they'll do is they'll blame self-directed IRAs. Well, self-directed IRAs are bad because scams happen. It's like saying checking accounts are bad because people steal money from, or banks are bad because people steal money from banks. I mean, it's like, what was it, like a Dillinger who said, why do you rob banks? And he says, because that's where the money is. Right. So self-directed IRAs are just a place where money is held. And so naturally we would be a target for this kind of, of situation. So fraud awareness is extremely important to me personally, and to our clients. It's something I talk about quite a bit. But yes.
And I think there's two types. So, kind of what you mentioned, Kaaren, that was like a direct asset scam. And so what I'm going to talk about right now is what do they have in common? I'm referring to scams that were funds where you're basically giving someone your money instead of, direct to a single asset. So there's a couple of things, but let me jump into some of the ones that you probably know of. So Bernie Madoff, $65 billion in investor funds that were lost. So that was a Ponzi scheme. Sam Bankman-Fried as FTX. I think that number was 6 or 8 billion. I can't remember. It wasn't a Ponzi scheme, but it was fraudulent activity where he moved investor funds from the platform, the investor platform, over to his personal account. So, he's still under trial. Like, did he steal or was it negligence at some level? That's TBD. But investor funds were taken off of the platform and put into his personal account. Trader's Domain, this one is going through review right now. This is a huge one as well that has billions of dollars, and it's a platform. So FTX is a platform, Trader's Domain is a platform, and Trader's Domain is getting they're being looked at as a Ponzi scheme. So what do these are some, some really big ones. What do they have in common? Can anyone tell me? Use the chat. Can anyone tell me, what do these three have in common if you know anything about them? They did have trust of the people, definitely. Lack of transparency. Fear of missing out, Jeff says. No audits, overpromise of returns, money siphoned off, promise of quick returns. No independent oversight. Paul, you got it.
Yeah.
Yeah, so all the other things are true, but really the no independent oversight is one of the biggest signs. It's not a sign that it's a scam, but one of the easiest things you can do when you're doing your due diligence, 2 steps you can take. So here's 2 steps. These are really important. These are the biggest things that I would say if you're going into a fund or a private investment, you should take these 2 steps. One is to ask for financial statements. Okay, and so with Bernie Madoff, he would provide financial statements, but they were prepared by his own company. Okay, it doesn't mean that it's wrong if someone's preparing their financial statements themselves. However, if it is a fund and they're using a third party to do their books, and that third party can give you or is preparing the information, the financial statements, that's a huge vote of confidence. They're looking at the bank account of this fund and preparing the reports. They're a third party. So if you ask for that and it's a third party, then, that's a bit of comfort for you.
Can I jump in? Go ahead, because you're going to say however, and I think
I was going to say however.
The other night. Yeah,
and why don't you go ahead, Kaaren? You say this, and I'll.
Well, I mean, we were talking about this the other night, so I don't mean to steal your thunder. But it just is so critical. Yeah, you get the third party, but then what you need to do is contact that third party. Maybe it says their financials were audited by, say, Arthur Anderson, Arthur Young. I don't know who they are now, but whoever audited those financials, call them. Say, hi, I'm looking at the audited financials for XYZ company. Who in your company did this audit? And I'd like to talk to them. Oh, we never did that audit. That's what I wanted to add.
Yes, and that is exactly it. Because the example that I gave where the investor invested in his wife's best friend's husband funds, and I said, didn't you ask for financials or any track record? And he said, yes. And they were exactly as he said they would look. And I said, but were they prepared by a third party? And he said, well, they had a third party logo on it. But then it turns out once they got an attorney, that third party didn't even know who this fund or this company or this person was. They had not Photoshop, but they had forged the documents. They had put logos of third parties on their self-prepared documents. So Karen's point of then contacting that third party is important. So if it's a fund and they have a fund admin, then you can contact the fund admin. If they don't have a fund admin, and and you ask for an audit. So then, if they're audited, like Kaaren said, ask that auditor, did they prepare it? Are they auditing? If they don't have either of those, you can ask for a K-1, a tax document. And then you can ask that CPA if they looked at the bank accounts when preparing those tax documents, because some CPAs will prepare the yearly financials of a fund or a syndication or whatever it is off of a spreadsheet of numbers that the syndicator or the fund manager gives them. So that doesn't really give you any vote of confidence. But if the CPA says, well, they gave me all 12 months of their bank statements and I prepared the documents off of those bank statements, that gives you an extra vote of confidence as well. So those are the two, I guess, is 3 steps. The financials by a third party and verify, audit results by a third party and verify, tax documents by a third party and verify.
When you bring up this point, I mean, to further illustrate it, if I may, I belong to RITA, the Retirement Industry Trust Association. I sit on the board. And so every year we have 2 conferences, and I usually moderate a panel on fraud. And so last year I brought in somebody who was actually somebody who was incarcerated for fraud, who's, turned the corner, found Jesus, yay, and wanted to come clean. He felt so badly about it. He's just like, take me. He brought all the docs to the SEC and said, I've been doing this for 8 years, take me. He served his time, and then he came out of prison trying to help other people not be scammed. And what he suggests is exactly what Sarah just said. He says that, and he was so brilliant. It's like, take that brilliance to make money, not to just hide things. But he did that very thing. He was able to make audited financials. It looked legitimate, but then he just copied and pasted a logo on them from a large firm that did this sort of due diligence. So you really have to double check. You make the investment's going on, you ask for financials during the course of the investment while your money is still, baking in that, what you think is a passive oven. It's not. You're still responsible. And then take a look. And just because it has a logo on it doesn't mean it's legitimate. Like Sarah just said, contact them, talk to the CPA. That's brilliant. I never thought about that, the K-1s, but straight up, and talking to the CPA, great advice.
Mm-hmm. Because if you guys are watching the chat, there are people who say, yeah, I looked at third-party financials, reputable accounting firm, but we didn't do verification that that third party actually prepared those statements. So it's common, you guys, it's common. It's not like we heard it once. You can see people in the chat are saying they were part of it. We've heard it tons of times, dozens of times, Kaaren has. Another one that people are saying is make sure you really read the docs that you are signing. I see some people saying, it wasn't, people were doing what the document said they would do, but the people didn't read the documents. So an example in the chat was, the document said, hey, investors, you get certain amount and I get all the upside after that. But it was kind of hidden in the marketing from investors. So investors didn't realize that. So it wasn't scam or fraud because they're doing what the doc said. However, is it unethical to kind of not make really clear what the docs say when you're doing your presentation and your marketing? I'd say so. However, it is investors' responsibility to always read those documents very thoroughly. And if you have questions, ask. Oh my gosh, we have investors who come back like 20 times with questions like, what does this paragraph on page 43, section 8 mean? But that's what you should do. You should really get to know the legal documents behind your investments. Jen is asking, is there a third party I can pay to do these validations? Not that I know of. I'm sure there's one out there, but I will say, on our checklist, one of the things is to do background checks on the sponsors or the people you're doing a deal with, potential partners. So I do this now with vendors if they're going to be a vendor that I'm paying a lot of money to, because of that PR firm that scammed me. Now I'm like, okay, now I got to do background checks on vendors as well. And I have a private investigator who's my friend. And so every time I'm going to go into contract with someone, I say, here it is, it's not just a background check. I have a private investigator who does full investigation on all principles, etc. You can go to veravest.com and you can see, so veravest.com, they do background checks on sponsors. So like for me, I pay for every year for, it's kind of like a membership, but basically I'm paying for them a few $1,000s, and they do a full background check on me and the principals at my company. And then they put me on their website as verified. So that reduces a step. So you don't have to go do a background check on me. You can look me up on veravest.com, and there's a bunch of other sponsors listed there. So for the question about, is there someone who, a third party who can help with this? That's only one step though. I mean, I could still provide fraudulent documents and stuff like that. So you still need an extra step, but it's a good first step. Oh, Constance, thank you for that. Okay. Next I'm going to talk about choosing your custodian. So Kaaren already hit on this in the beginning, but why am I doing this presentation with a self-directed IRA company instead of like an attorney? Well, it's because attorneys aren't targets. Scams target IRAs and 401ks because they represent trillions of dollars. Kaaren, you know better than I do. What's the volume that are in these accounts?
We've got, well, as an industry, no one in the industry is a public company. So we don't have public numbers, but we have billions and billions in self-directed IRA funds. Some of the larger companies, I know one of them was saying they had 40 billion. So self-directed IRAs hold billions and billions of dollars. Let's just put it that way. We don't have a precise number because of the private industry.
I think I read somewhere maybe a couple of years ago that it was like 2 trillion or something. And who knows where,
it's speculative how much it is. Yeah.
Yeah, but it's a large number. So it's a target because if people are self-directing, it's a large amount of money that it represents. So I'd love to hand it over to you, Kaaren, to talk about how to choose if you're thinking of, hey, I have my IRA or my 401k and I want to roll it over to an account. It's not a taxable event, you guys. An account that I can choose what to invest in. I want to invest in real estate. I want to invest in these funds. And I want to use the money that's in my retirement account. So it's really important what custodian you choose. And there's lots of things to consider when choosing a custodian. You want someone who's really responsible. Like you heard what Kaaren did for her clients, those 17 accounts. She talked to someone high up or high, at FINRA about what can we do to recover these 17 accounts. Who's going to do that? Kaaren did that for her clients. So you want to know, is your IRA going to be looking for these things and have your back? However, they're not responsible for doing all your due diligence. But Kaaren, I'd love to hand it over and talk about, what's your custodian's role, how to choose a good custodian, and how your custodian can help in these situations.
I really appreciate it. I don't think anyone's ever asked me this question. So this is great. 17 years doing this. So I mentioned I am part of this organization called the Retirement Industry Trust Association. So I personally know a lot of the owners and managers of the major self-directed IRA companies. I've met pretty much everyone. So these people are ethical people. I mean, there have been, I can really think of one unethical situation that happened in my career with somebody called APS, American Pension Services. And that was unfortunate. But after that happened, it's like, they closed the barn door after the horses got out. Where did I come up with that? I'm not a farmer. Where do I come up with that? It hits my brain. But with self-directed IRA providers, largely, highly ethical people. And when you choose a self-directed IRA company, what you want to do is you can contact the state where their trust company is registered. You can go to the Better Business Bureau. You can you can Google them with the word fraud after it and see if there are any, and that's what you can do with any fraudster. Google their name and the word fraud after it. But when it comes to self-directed IRA companies, what we can do is review your assets. So when you're investing, you give a direction letter or some sort of bi-direction letter giving us written permission to move your money. And then the supporting documentation, that's your contract. So we will look at the documentation. And we're looking not for fraud, but for what we call prohibited transactions. Those are IRS rules. You can read about prohibited transactions in the Internal Revenue Code. It's IRC. I'll type it in here. So if you want to look about what's IRC 4975. Now, this doesn't deal with fraud. It's just what is allowed and what's not allowed in a self-directed IRA. But sometimes we spot fraud. But we're not, like Sarah said, we're not advisory. So we can't slander someone and say this is a criminal if we don't know that for a fact, right? It's like, that's why on the news they say an alleged criminal, because until they're convicted, they're not, it's slander to say they're a criminal, right? But what we can do is call the asset not administratively feasible. That was made up by lawyers, some really smart lawyers, to say this asset is not administratively feasible for us to hold. Now, I can tell a story where I used that phrase, so I think this is appropriate. We had an account holder who had a large IRA, but the way it started is this man called me and he says, hi, I'm an asset sponsor, I'm raising capital, and we have this note that we want to make. Do you allow unsecured debt? We said, yes, we do. I said, great. Well, I have someone and she's trying to do this at another trust company, but they're bad, but you're good, so you'll do it. And I said, well, let's look at it. So the account holder opens an account, puts in $500,000, which is very large for an IRA. If you have previous retirement plans and you roll them over, that creates a large IRA. But over the years, contribution limits have been like 2,000, 3, 4, 5. Now it's 6,500. It takes a long time to get to $500,000, even if you're contributing 6,500 a year. So a very large IRA. And so that kind of like, oh, this is very large. And then we looked at the document when it came through. Again, due diligence is a responsibility of the account holder, but like this just stuck out. What is this? So we did a little homework. We Googled this address. Where does this person live? And the person lived in in the Southeast in a $50,000 home. It's like, you know what? When you invest in a $500,000 note, that's not just a note. That's a security. And in order for an asset sponsor to, be handling a note like this, they need to be registered with the SEC, and the asset needs to be registered with the SEC. So we do a little more digging. It turns out, as this took quite a while to all uncover, but then we learned that neither the asset nor the asset sponsor was registered with the SEC because one of the two guys that were the asset sponsors was incarcerated for 2 years in jail. The SEC put this guy in jail for stealing money from people. And our account holder either was in cahoots or just did not do her due diligence, didn't type this guy's name, fraud. She would have seen his rap sheet. She would have seen how he was in jail for stealing money and that the SEC put him there. That is a red flag, my friends. You have to do your due diligence because it's entirely on you. And sometimes people lose money in retirement accounts. Honestly, like a deal doesn't pan through, go through. We have something like the Great Recession where there's, you can't help it, and a deal really falls apart for legitimate reasons. But sometimes it is fraud. So you just need to be super wary and on your guard and always do your homework. But sometimes things fall apart for legitimate reasons. And we can talk too about maybe later about what happens in an IRA when there is a toxic asset. We can talk about that.
Yeah, why don't we dive into that now?
You want to do it now? All right.
Yeah. Mm-hmm.
So anybody who lost money during the Great Recession, maybe you had stocks and your portfolio went down 40%. What happens when you lose money is that's not a loss you can write off on your taxes. It's not your taxable income. It's tax-deferred retirement savings. And so when you lose money in an IRA, it's just lost. You don't get to deduct it as a loss on your taxes, which really adds insult to injury.
Yeah, it does.
Yeah. Ouch.
Go tax law, jeez.
Well, but so just know that how incredibly important due diligence is, and you're getting excellent advice today so that you don't get stuck. But sometimes you just can't help it. Sometimes the fraudsters are super smart, but you can't write it off. And say, for example, this asset was, I don't know, like even a Ponzi scheme. We're not valuators. Being a valuator means you're a fiduciary, and we do not have that kind of fiduciary duty to your account. There's a lot of case law that states that too. So when someone loses money, it's not the self-directed IRA company's fault. These are self-directed, and the account holder is choosing the asset. So, you also have to have a valuation saying that the asset value is actually zero. We can't just zero it out because we feel like it. We have to have a third party tell us it's a zero value. So these are things you need to know up front about what can happen on the back end when you do run into a toxic asset for every self-directed IRA company.
And I'd like to expand on the point that you made, Kaaren, about you don't do due diligence once. You want to keep doing due diligence as you see different opportunities come across as well, because people can change. I was looking for her name in here. She's not in here, but one of our investors who invested in about 8 investments with us so far, I think on the 3rd investment she did with us, she still did super hardcore due diligence. And she looked up all the addresses of the properties and the banks and da-da-da. And she said, Sarah, I looked up the address for this fund and it was like an ice cream shop. And I was like, what? So like my heart skipped a beat. I was like, it's an ice cream shop. Wait, what? Did I like type an address wrong? And I looked and there's an ice cream shop next door to the Wells Fargo. And so the Wells Fargo is where the bank account is for the fund. And the ice cream shop was right next door to it. So like when you zoom in, you see like the Google button was like, you know, right on the edge. And you had to zoom in one more to get the name of Wells Fargo to pop up. But my heart skipped a beat. But I thought, you know, how good of her that she's still doing detailed due diligence, even though she's already done a couple investments with me, she was still doing detailed due diligence. So I encourage everyone to do that, because you've heard us say that usually people don't intend to do something fraudulent, scandalous, or a Ponzi scheme, but it develops out of a bad situation. So that's why you need to continue, because someone who might have been great years ago and now things are tough in 2023 for a lot of reasons, for a lot of funds, for a lot of real estate syndicators. So when times are tough, people's true colors come out, right?
Did you read here what John said? It's so brilliant. He says, this is starting to sound not very passive anymore. It never was passive. It was never, they call it passive income because that just means that you're not swinging the hammers. You're not doing the work. You're just sitting back while they do the work, but there is no such thing. If you value your money, there is no such thing as a passive investment.
Exactly. And Ben is saying you should be watching at least quarterly and annually the management reports for all of your investments. If you're a limited partner, you know, if you're passive, it's still your responsibility to be reviewing things. Yeah. Well, that is the end of the content that I wanted to share, Kaaren. But do you have any other examples that you've seen with your clients, with your company, that you'd like to share a lesson learned for the audience?
I do. And I was thinking in my head that, you know, I should have run out by now, but no, I have another one.
Oh, yeah, I'm sure.
So the other thing too, when you're investing with somebody, look at their website. Does it look Mickey Mouse? You know, you want to, is their website, was it carbon copy, or what do you copy written in 2006 or something? I mean, look at, do they seem like a legitimate company? What's your gut feeling? I mean, if you have a gut feeling, dig into it, because the gut feelings are there for a reason. So we had an ongoing investment where our account holders were investing in this thing. We had a few, maybe a dozen people invested in this particular asset from the sponsor. And so, and this was over a period of years. So here comes a request to modify a note modification, super normal. Hey, things change. We're going to kick the can. We're going to, you know, modify this note. And as long as the parties agree, it's perfectly fine. But the way they modified the note is they had just no idea how to modify a note. It was so wrong. They just wrote on the face of the note, like modified, you know, it was just super amateur. So I took the name of the asset sponsor and I Googled them with the word fraud after. Guess what I found? I went to the FINRA website, FINRA, FINRA. They have something called broker check. I looked up that person's name, and sure enough, they were barred from being a broker dealer. All right. And we had probably a dozen notes with them, or our account holders did. So I contacted law enforcement. And actually what I did is on FINRA, there was a letter that was attached as a PDF to this, you know, this statement on this person. And there was an email address of the person at FINRA who made this determination. So I thought, well, you know, it's been 10 years, but what the heck, let's grab it and see if they still work there. If somebody answers the email. Sure enough, I said, does this person is, you know, conducting business and raising capital, does this particular grievance, does it still hold? Are they allowed to do business? And the person wrote back, no, and tell us more. So we did. And what we were able to do without even realizing that's what we were doing is we caught them mid-Ponzi. That person went to jail. and there was still money to retrieve. They hadn't, gone to the Bahamas or something like that. They still had capital to repay a great many of their investors. And so there was some recuperation of the capital because we just happened to catch that. But it's rare that we get to do that, but we did that time. A couple of times we've been able to save an account holder from losing their money to a scam, but we don't always see it, and neither do the investors or the account holders.
Yeah, thank you for that. I see some questions saying, okay, but now what? Like people are giving examples of, and we're giving examples, and then what do you do? So that's a tough one because if it's a big enough one, there's like with Trader's Domain, because it's not in the US, what can local attorneys do, and threat is minimal. So what we have a large group, because we have money on that platform. We're part of a larger group that's on that platform too. So together we've hired someone who specializes in recovery of funds. So a lot of times people are putting together like a class action lawsuit, something like that. But I think it's hard because sometimes it's just not there anymore. Sometimes an attorney won't take a case because they know they won't make any money because the funds aren't there. So for instance, the PR firm that scammed me, no attorney would take my case because they said, I'm sure there's no funds to recover. They didn't even want to take the first step, like a demand letter to return funds, because they said, I showed them the report from my private investigator, and they're like, yeah, we're not. That money is long gone, Sarah. Because attorneys will take, like 40% of funds recovered, something like that. So if it's not recoverable, they'll bounce out, which is unfortunate. But if you believe the funds are recoverable and it's a large enough amount to involve an attorney, you can do that. Alternatively, if the fraud is over, I think it's 280,000, then either the SEC or the FBI cares. And so if maybe yours was 50K that you lost, but other people involved, you can get together, and maybe you can't recover your funds, but you can bring it to the authorities, who will then prevent that person from committing fraud to other people. They can put them in jail.
Yeah, that's exactly what I see too. Is the number one thing you can do is report it, even if you don't get any money back.
Yep.
Because they build a database, and if enough people are reporting, maybe your situation isn't large enough to warrant a situation, but you've reported it. There are forms that the FBI has forms. All these different law enforcement agencies have forms to fill out. It used to be called the Department of Business Oversight, but they changed the name here in California, where there are forms. Every authority has a form you can fill out, and that is the first thing to do. The other thing is realize with investing comes risk, right? And it is like American greed. That's true, but there's always risk with investments, I think. And we're talking about fraud. What happens? We see it, but the large number, the great majority of deals don't include fraud, and there is no fraud in most of the things that we see. It's just these squeaky wheels that get the grease here, and they make dramatic stories. It's a lot of drama that we're talking about today, but it's not every day. We just don't see this every day, but you absolutely report it to everybody that you can think of. File complaints, and the other thing too, if it's with the self-directed IRA, let your custodian know, hey, this is what happened to me. If your custodian isn't the one that told you what happened, but if you see fraud, absolutely report it to us if it's in an IRA immediately, so that we can take a look and see, because we can say, maybe somebody else comes in and they want to invest with that same asset sponsor. We know that you've been stolen from, and we can verify it. We might say, hey, we're not going to fund this next person's deal because it's not administratively feasible. Well, what does that mean? It means it's an asset that we're not willing to, to fund. Well, why not? Because it's not administratively feasible. You see how that goes? How that goes without saying that someone's a crook. So tell us so that we can hopefully save the next person.
Yeah, definitely. And you guys are doing a great job sharing it in the chat, because that helps other people hear what's going on. And I want to reiterate what Kaaren said. Like, we're not doing this to scare you, but we want you to keep yourself safe so that you don't get scammed, so that you do continue being in good investments and keeping your funds safe. Should we switch to Q&A, Kaaren?
Let's go for it.
Okay, cool. All right, there's lots in the chat, but I'm going to go to the Q&A first. So if you guys have any questions, please use the Q&A function. So I see the first one from Mike. Hi, Mike. When you invest in a syndication, multifamily or other, does UBIT come into play when the asset is sold?
I can touch that if you like.
Mhm.
All right. When you're invested in a syndication and there's debt,
Yeah.
then UDFI comes into play. And so let's talk about that. If you want to know about this tax, talk to your tax advisor. Go to the IRS's website. I'll type it in right here. So it's irs.gov, okay, gov, that website, and look up Pub 598. It discusses UBIT and UDFI. But yeah, you could, when an asset is sold, if they had leverage, you could get a K1 that says, this tax does apply, and you need your tax preparer to create a 990T. And if there's any tax owed, your IRA would pay that tax.
Thank you, Kaaren. So if the asset has no leverage, no debt, is there any UDFI?
There would be UBIT, unrelated business income tax, if it was an active business. If the syndication was like, this is why you need to ask your tax advisor, because you need to find out if that is active or passive. And so it depends. So you need to ask a tax authority.
Because it's asset specific, what that number might be. All right. With prices and mortgage rates so high, is it still a good time to buy real estate? So many advisors are saying not to buy now. They're telling me to wait. So I think both of us can answer this. We acquired 10 apartment complexes in 2022. We acquired 3 in 2023. So it's not that it's a bad time. It's that fewer deals are good at the moment. People are holding, there's fewer properties up for sale, both in residential and in commercial. So you don't necessarily have to wait, but be pickier about the deals that you find. So on our checklist that we're going to share with you guys, one of the things is take a look at the debt. So Kaaren is more familiar with single family homes and stuff like that. So I'll hand it off to you in a sec to talk about how this relates to that space. But if you're looking to buy real estate and it's a syndication or commercial and you're an LP in that, one of the biggest changes to my due diligence checklist right now is looking at the debt and making sure it's fixed rate. Number one, is it fixed rate debt? You definitely want fixed rate debt right now in a syndication. You want the term of the debt to be longer than the whole period of the property. So like if you have 3-year fixed interest, but the business plan says you're going to hold it for 2 years, for 5 years, then there's 2 years at the end where you're going to have to get fresh debt. So make sure that the term of the debt is longer than the business plan. And then you also want there to be, so this third thing is either that there's no prepayment penalty or that the loan is assumable. The best is that the loan is assumable, because say, you get a rate right now and it's 5.6%, but in 5 years when you're selling the property, say interest rates out there at 9% and someone can assume that loan, you're going to really have more buyers looking at your property because of that attractive loan. So, so it doesn't mean it's a bad time. It's just a time to be much more diligent on how you're purchasing. What do you think, Kaaren?
Well, I agree. I'm not a real estate investing expert. I just have my own personal information, but I think it's always a good time to buy real estate. I think buy and hold is always great. I've heard people say that buy now, and then if the rates go down, refinance. But if you can cash flow on something, why wouldn't you? But that's a personal opinion. My business is self-directed IRAs and not real estate investing. I dabble in it.
Yeah, there you go. Oh, John, I wish the answer was yes. John's asking, are there options for insuring an investment against the potential that it's a fraudulent Ponzi scheme? I don't think so. I've never seen anything like this. But Google it, see if you can find it, but I don't think so.
Yeah, well, the insurance agencies would really do their due diligence on the asset, wouldn't they?
Yeah. That would be a good business to go into.
That's what I was thinking too. Yeah.
All right, Elizabeth's asking, are there companies that are good to work with as they are legitimate companies to invest with? Well, yes, definitely. There's most of them. Yeah. So you get to learn to do your due diligence on them. All right, Kaaren, do you actively manage your clients' self-directed accounts, i.e. make sure tax forms, etc., are being provided on time?
No, it is a self-directed IRA. We do remind our account holders, hey, it's time to turn in your valuation. Every year we need you to provide a value of your assets, your alternative assets. We may remind you, hey, I don't know, of something like, oh, here, take your RMD this year. We're going to remind you, but a self-directed IRA is by nature and by name directed and managed by the account holder. I mean, we do the cash management, right, and the tax reporting and the record keeping. But as far as making sure that you're responsible for what you're supposed to do, that responsibility lies on the account holder. And yes, we do remind you.
Bunch more for you. So Kaaren, can we roll existing 401k funds into a self-directed IRA, and is there a fee?
You can, if you have an existing 401k company, you may not be able to move the money. You probably have to wait until you leave the service of the company, unless you can do an in-service transfer, transfer while you're working there, while you're in service. But if you have a previous employer 401k, then yes, you can roll that money over. And I'll just put my website here. And if anybody wants to email me with extra questions, just hit us up at info@udirectira.com. But yes, you absolutely can. And our fees are there on our website.
And I'll say, we've done a lot of due diligence on self-directed IRA companies, and uDirect's fees are very reasonable compared to others that we've seen. So two reasons why we always refer our investors to uDirect IRA, Kaaren's company, is one, the fees are very reasonable, and two, the speed at which they work, they're very nimble. So some of the giants out there, I won't say any names, but when investors are looking to get into our investments, those giants don't move fast enough and the investments fill up and close. And those who are working with other companies that can fund within 2 weeks, something like that, they're able to get into those investments. So depending on what you're looking to get into, if there's a time sensitivity to your investment, you want to make sure you're going with a self-directed IRA company who can act quickly when you're wanting to place an investment. Okay, can you explain the difference between self-directed IRA versus solo 401k and the tax implications, pros and cons between the two?
Sure. An IRA is a lot of different things. It's a traditional, a Roth, a SEP, a simple, a spousal, and inherited IRA. All of these different kinds of plans have different rules, but a solo 401k is not an IRA, it's a 401k. And so it has a lot of extra bells and whistles. You can still contribute pre-tax and after-tax dollars in a solo K, but usually the contribution limit is a lot higher. It's the same as a SEP. It's the lesser of 25% of your income, up to a cap of contributing $66,000 a year in 2020. So that's what you can do with a SEP or a solo K. But a solo K is the one self-directed account you can actually borrow from. You can borrow $50,000, a lesser of $50,000 or 50% of the account value. But you must pay your account back over a 5-year period, either monthly or quarterly, at a market rate, so that you show that it's truly an investment. So you get to use the money personally and you're paying yourself back. You're literally investing in your own 401k when you take the money out personally.
Thank you. We're getting close to time, so I want to point out one thing. You guys look in the chat, because a lot of people are saying they're giving accolades to uDirect. So that's part of your due diligence as well when looking for people to have in your ecosystem, your investment ecosystem. And you can see Stacy is from Sugo Capital. She's our investor relations coordinator. And she was saying, uDirect is great to work with. She's a client of uDirect as well. So I wanted to point that out. This is, current clients saying great things about a company or an investment firm is always, it's always great to believe. All right. Let's do one more question. It looks like they're all for you, Kaaren. Do you see the questions in the Q&A? Okay.
Well, I'm typing the answer.
Okay.
So one of the things is if a deal shows a loss, and how do you get rid of how do you close the account? You provide us a valuation, and once the valuation says 0, we zero it out and close your account. That's the short answer for how that works. Yes, we have live support at uDirect IRA Services. We have a live chat. I mean, it's not 24/7. We do sleep. We don't have someone overseas answering your questions. We're answering your questions here, but we're pretty responsive. When using uDirect, it looks like a charge Documentation review fee, how do we estimate? The doc review fee doesn't always come into play. That's like an extreme situation. If we have to go to extra lengths to review that document, if it's extraordinary, we have to do research on the document. Typically, it's $35 for every investment, but we waive the first 6 for the lifetime of the. So to answer Matt's question, and does uDirect set up checkbook? We allow checkbook IRAs, but we're not attorneys. We don't set them up. But we can certainly direct you to attorneys that do, absolutely. And some self-directed IRA companies don't allow it. We do allow the IRA-owned LLC, you would call the checkbook IRA. And how do you process a deal that has not paid real estate taxes and is headed to foreclosure? We don't process it when it looks at that point, it looks like you're dealing with a toxic asset. Now you've invested in something. There was risk when you invested, and now this is happening. This is the time for you to discuss this with the asset sponsor, ask them what they're doing, what is their plan to make the deal whole, to bring the taxes current. You cannot use your private dollars to bring those taxes current, but you could maybe work out something with them to use your IRA to bring the taxes current. I don't know, but you work out something with the asset sponsor to try to save your deal. And that would be part of negotiating your deal.
Well, Kaaren, we have come to the end, so I want to say thank you so much. And everyone, if you look in the chat, info@udirectira.com. So if you have additional questions, please reach out. We are going to send the replay out tomorrow. Share it with everyone you know who is making investments, which is like everyone, right? Because the more people who know, the more people who we get to keep safe. So we'll send out the recording, and on the email, you'll see how to get in touch with Kaaren, how to get in touch with myself if you want to work with us in the future, and feel free to share that. And Kaaren, I want to say thank you so much for being really transparent, and also for helping so many of your clients when you spot these things and being active in this space. It really means a lot.
I love being a fraud fighter when I can.
Yeah.
When I get the opportunity. Yeah.
Yeah. Awesome. Okay. Thank you, everyone. We will see you next time. Happy Halloween. Happy Halloween. Bye, everyone.